Today we're going to be talking about picking the right levels. This is without a doubt the single most important concept in the entire way I trade. You need to understand this. So watch this video fully through, watch it again, and watch it again. If you don't understand this video, you're just not going to be able to trade like me in no sense of the word. You have to understand this to a very high degree. So some prerequisites before you watch this video: you need to understand all the different types of levels that I trade with. So go back on my YouTube channel, go into the bootcamp playlist, and watch all the videos before this. You're going to have to understand all the types of levels that I use to understand this video, and if you don't, then you're just not going to be able to follow this video all too well. So if you have watched all those videos, what you're going to be left with is an understanding of how to mark a whole ton of different types of levels, but we don't use all of those, right? We don't use every fair value gap that shows up. We don't use every order block that shows up in the market. We don't use every liquidity sweep in the market either. So what this video is going to be going over is exactly how I pick the levels that I use, and it is a more or less mechanical process. So this is something that you could learn, and after this video you should be able to do this exactly how I do it every single time. There's no subjectivity, there's no discretion. This is how you do it, no questions asked. So you could describe the entire method in 2 words. So first and foremost, highest time frame down. What does that mean? That means that we start marking levels from the highest time frame available and we move lower. So the time frames that I particularly use, I use a monthly, I use a weekly, I use a daily. And then once we get lower than that, typically I'm never marking levels on a lower time frame of the daily chart. Now, don't get it twisted. That doesn't mean I'm trading on a daily chart. I trade on a 1-minute time frame and I scalp the market. But in general, all my levels are coming from the high time frame. And when I say high time frame down, it means that we first start marking levels from a monthly chart, then we move on to a weekly, then we move on to a daily. In rare situations, we'll move down to a 4-hour, then a 1-hour, then a 15-minute, a 5-minute, and a 1-minute. But 95% of the time, you're going to be stopping at a daily chart. And then the second rule is if a level overlaps a higher time frame level, you're not going to use it at all. So let's say that you're looking at a daily chart and that there's a daily order block level inside of a monthly fair value gap. You're not using that daily order block because the monthly fair value gap overlaps that daily order block. So you're not going to utilize it. And these are my 2 key rules for level picking, and it's what makes this whole thing mechanical. And in terms of the exact levels that I'm looking for, I'm only using the levels that I've taught so far in this bootcamp. So again, you need to go back and make yourself familiar with the levels that I use. So before we begin, join the Discord. It's completely free. You do not have to pay to join the Discord. You just click the link, join the Discord. I'm posting my levels for free every single day for everybody. I'm also doing high time frame, very in-depth details every single week. And then there's also a very active question channel that I'm in. I'll send long voice memos. I'm actually putting effort into answering people's questions in a deeper way. So join the Discord. There's no reason you wouldn't. It's literally free. Literally free. You don't have to pay $1 to get into the Discord. So go ahead and join it. And let's get on to high time frame level picking, the most important thing in all of my trading. So we're going to start here with ES, or the S&P 500. One thing very important before we begin is whenever you're looking at a future chart, so which you should be, anything with 1 exclamation mark at the end, you need to go down into the bottom right corner here, make sure that B adjust is toggled on, and make sure that set is turned off. Those are key important things that you need to have set right. If you don't, you're not going to have the same levels as me, and the technical analysis just isn't going to work the same. Alrighty, so like I said before, we're going to start on the monthly time frame here. And looking at the S&P 500 on the monthly time frame, it looks like that we don't really have anything, but we definitely do. Okay, so this candle right here is a potential order block. So what does that mean? Well, if this current month was to trade underneath this low at 540, that would make this current candle an order block, right? If price was to trade underneath here, this would be the order block. So the levels inside of here are going to be useful. In specific, the mean threshold of this ungained order block is going to be a useful level. If you don't know why this will be a useful level before it's gained, then you didn't do the prerequisite. Go watch the order block video on this channel that I just posted a couple days ago. Please do not watch this video unless you've watched all the other videos in the bootcamp series so far. You're doing yourself a disservice. You're not going to understand why I'm using these levels. So, again, we know that this is going to be an important level. If we get under this on a low time frame and we hold, that's likely to go gain the high time frame order block on the monthly. So the mean threshold of the ungained order block becomes important. On a monthly, since this is pretty much all we have, usually since we're pushing all-time highs, if we're looking at all-time highs, I'll also just mark the all-time high level as well. It's not that this has anything to do. It's not a high time frame level. It's just this is the new all-time highs that we could get into. So there's nothing else here, right? We have a fair value gap way down here. We have order blocks way down here. Personally, when I'm marking high time frame levels, I'm looking for what's relatively next to price. I don't really care about marking up the entire chart forever. That's simply because I redo these levels every single day. So I'm looking for what's the closest to price action. And again, we're going to spend a little bit more time on ES, but we're going to go pretty quickly through the other ones. So pay attention. Now we drop down to the weekly chart. So first and foremost on the weekly, we're going to have this weekly wick. Okay. So remember how we mark out wicks? We want to mark all the levels inside the wick right here. And I personally make my weekly levels purple, and I would do that as well. Every single time frame, I would make a different color just because then it's a lot easier to kind of understand what you're looking at. We have the 3 levels inside of this wick. Why are we using this wick? Well, go watch the wick video on this YouTube channel. You should know why, right? This wick is bigger than all the ones surrounding it, and it's rejecting off of all-time highs. We would use this wick and the levels inside of it. Then we also have the new week opening gap. So from the close of last week to the open of this week, we have a gap here, and this is going to be our new week opening gap. And this is all we have on the weekly. Now you might be wondering, what about this big down candle as an order block? What about the mean threshold of this? We can't use any of those. Why? Because the higher time frame, this monthly level, it overlaps the order block. Okay, this monthly level overlaps the weekly order block. So I am not going to be using this weekly order block at all. Same thing here. I can't use any levels inside of this weekly candle. I can't use the mean threshold of this. Why? Because the higher time frame level overlaps it. Now, one more thing that we have on the weekly chart here is this weekly volume imbalance right here, which we can use. Why can we use this weekly volume imbalance? Because again, no higher time frame level overlaps it. If the monthly was right here, then we couldn't use this weekly volume imbalance because the monthly level would be overlapping it. So at this point, let's go ahead and drop down to the daily chart here. So the first thing that I see on the daily chart here that we could use is the daily overlap level right here, which we have right here. The reason that we could use this daily overlap level is, again, because there's no higher time frame level that overlaps this daily overlap. It's on its own. No high time frame level cuts through the range where you would mark this daily overlap level. So you can indeed use this daily overlap level right here. Now, you can't use the level inside of any of these wicks. You can't use this volume imbalance even. The reason you can't use this volume imbalance is because, again, quite simply, the higher time frame level, if you were to mark this volume imbalance, we have a higher time frame weekly wick cutting through the range of that daily volume imbalance. So no, you cannot use that daily volume imbalance. You can't use any of these wicks on the daily. You can't use this daily order block. None of it. Now, another thing that you could use here is this right here. You see how this wick held price action down and then it closed above right there? You could utilize the levels inside of this wick if we come back down into them as the inversion wick of this range. Again, the reason you could use this is because no high time frame level overlaps it. Very simple. And then one more thing that we are actually allowed to use here is the daily fair value gap right here. Now, you'd think that we can't use this daily fair value gap because the higher time frame weekly is inside the range where you would mark that fair value gap. Right, we would mark the fair value gap like this, including the volume imbalances, and that weekly is inside of it. And this is where we get to the one exception with the overlapping rule. If the higher time frame level that overlaps is a new week opening gap or a new day opening gap, we can have lower time frame levels that have it overlapping it. So we can indeed have this new week opening gap overlapping this daily and still use this daily. And with that being said, we also have the levels inside of this daily as well, which I'm going to make a different shade of red just to separate them from the other daily levels. So this is all the levels that we would have going high time frame down on ES. Now you could keep going. You could go to a 4-hour chart and try to find specific things on a 4-hour. Like here you would have this wick, or maybe you could go find, an order block or something. But usually if you have a lot of levels in terms of the high time frame, like if you get down to the daily chart and you already have quite a few levels, I would be very cautious to add any more. I would just keep it at what it's at. I wouldn't go down in lower time frames. What you'll notice is that price action almost always just bounces around these high time frame levels that you'll mark, And that's just how it works. So don't go looking for lower time frames just to fill in space. And also, if you have a lack of high time frame levels, don't go onto a lower time frame and just try to place levels just for the sake of filling up that gap. A lack of levels is also incredibly useful, because where there's a lack of high time frame levels, that's where your highly likelihood expansion ranges occur. Alrighty, so this is the S&P 500 and the high time frame levels here based on those rules, and this is how I would mark them. Let's go on to the dollar index now. So first and foremost, we have this old monthly fair value gap right here. The reason I would still be looking at this is just in case price action was to slam down and trade into it. If we got more close to it, like if I go onto a daily chart, we're really far away from this on a daily chart, so we don't really have to pay too much attention to this. If we got closer to it, I would also look at the levels inside of it, the 3 levels inside of that monthly as well. Now, some people might jump to looking at the levels inside of this wick. However, I would tell you to look further back in time and notice that that wick is rejecting and coming out of this inversion fair value gap. So I would look at this inversion fair value gap, and the levels inside of this inversion fair value gap is more important than the levels inside of that wick, because that wick was coming out of this inversion fair value gap. So this inversion fair value gap is more important. Now, just like before, we also have the mean threshold of this ungained up candle that we could look towards as potential, if we come down into it, as a rejection if we're going up, to not gain this order block. Again, because this is the new highest up close candle in the range, if this week's candle fell all the way down and came back up, this would be the monthly order block in that new range to sell us down. So we want to mark the mean threshold right here to be aware that if on a lower time frame we get underneath, this is easy to gain. If we hold above, it's probably going to continue and make new highs. Now, I would also mark the actual order block in this new range. So this is the high of it, and this is the mean threshold of it. I would be watching these levels as well here on a monthly chart. And now this is more or less all we have on this monthly chart. Now, to be clear, there's a chance, especially when there's a lot of price action on a higher time frame, that you could miss something. And there's stuff higher, right? Like we'd be using this order block in the range still currently if price came back up into it. There's equal highs way up here. We just had a liquidity sweep, etc. On these super high time frames, more often than not, I'm not looking for liquidity sweeps since I'm an intraday trader. But if you were swing trading, you should also be noting the liquidity sweeps and things of that nature as well. But as far as recent price action goes on a higher time frame, this is all I'd be looking at here. Then we could drop down to a weekly chart. So first and foremost here, you're going to be looking at the new week opening gap that got created. So from last week's open, or from last week's close to this week's open, you have a new week opening gap here. Then we have the levels inside of those right here. Now, we actually can use the 3 levels inside of this weekly wick way back here. And the reason that we can use these 3 levels is because although this monthly level, if you push it further back, it would be overlapping, this weekly wick got created before that monthly level existed. So we can have the 3 levels inside of this monthly wick right here. And then also we have this weekly volume imbalance that happened. If we bring it over, it got turned inversion. Right now it is inversion, so we could be utilizing these levels as well here on the weekly chart. Now, there's nothing else on the weekly in close proximity price action that I'd be utilizing. Let's drop down to a daily. And there's really nothing here on the daily to be utilizing. All the daily levels have higher time frame levels that are overlapping it. You do indeed have, you would have this daily fair value gap, but there's a volume imbalance. And if you include the volume imbalance, the higher time frame weekly overlaps it. So you don't want to use this. The things that you can use here on the daily is this daily volume imbalance way down here. And I would stay away from using this overlap level because the higher time frame overlaps it. So this is about all we have here on dollar index in terms of high time frame levels. So again, you're not going down to lower time frames looking for more and more that you could push here. This is your high time frame levels. This is what you're using based on those mechanical rules that I have. These are the levels. And you need to be using the right levels, otherwise your setups it's not going to be the same. Projected defined ranges aren't going to work. like the whole setups aren't going to work as good. Nothing is going to work as good if you're not using the right and the correct high time frame levels. So it is essential that you're using the right high time frame levels. Before we get on to the next chart, I just wanted to give you another reminder that this Discord is completely free. Join it. There's no reason you shouldn't. Active question channel. I put my levels every single day before the market open in here for free for everybody. I do high time frame, very detailed breakdowns for everybody for free. In fact, right after this video, I'm going to write up mine. And there's just a community of people in here who are all like you, all on the same thing, and all trying to learn. So without further ado, let's get back to the next chart, but just consider joining the Discord. So let's get on to Bitcoin here. And as you can see, Bitcoin is trending like crazy. By the way, crazy that Bitcoin is sitting at $110,000 right now. It's pretty wicked to think that just a little bit ago we were down at 35K. So on this chart, on the monthly, what do we have? First and foremost, we have this big monthly fair value gap that we can use right here. The reason that we could use this is just the main kind of thing that's trying to hold price up right now on Bitcoin. There's a giant monthly fair value gap. In very trendy markets like this as well, I would like to see the old high that we're just coming back up above. This will become an important level for me because, again, if this is a liquidity sweep, just like in the liquidity video, staying underneath here could break the trend. So watching this level becomes quite important for the market. Because this up candle in July was traded underneath, that means this order block is gained. So the levels inside of this order block become quite important in terms of levels that we could use on Bitcoin here. And then beyond that, we could also use the levels inside of this top wick, all three of them right here. The reason that we could use those levels is because this is the wick that's holding down the majority of price action up at the top. So we could use those levels in the chart as well. Now, we would also be able to use the levels inside this monthly order block down here and things of that nature as well. But because we're closer to all this other price action, this is going to be the monthly levels that I focus on here. So now let's drop down to the weekly chart. And this is quite messy, I will say. But first and foremost, we have the weekly new week opening gap that got created. Last week's close to this week's open. And we are also going to be able to use this weekly overlap level right here. Why? Because it doesn't overlap a higher time frame level. A lot of times when there's a lot of candles like this, it gets really messy. Even I will miss levels in price action like this because it's so messy, it's so nasty. A rule of thumb that you should live by is if you're not convinced on a level, if you're iffy on a level, don't mark it, okay? Prefer to have less levels than more levels. Less levels will always be better than more levels. And then we could also use the levels inside of this weekly wick right here. The reason that we could use the levels inside of this weekly wick is because, again, higher time frame does not overlap this wick at all. So we could use the levels inside that weekly wick here. Now let's go ahead and drop down to the daily chart. And pretty much all we have here on the daily chart is this daily order, daily overlap right here. This is pretty much the only level that we have here on the daily chart, and that's it, right? These are your high time frame levels here on Bitcoin. And again, you wouldn't go down into lower time frames and try to create more. These are your high time frame levels in terms of the strategy if you want to follow me. So I think at this point, you guys get it. This video is getting pretty long. I would do more and more examples. But if you want more examples from me, again, I mark my high time frame levels every single day in the Discord, the completely free Discord. Join the free Discord. I know I'm spamming it, but I'm trying to create a community there, and it's completely free. That's where a lot of like supplemental educational content is going to be. So if you're watching this bootcamp, joining the Discord, more or less mandatory, because that's going to be where the supplemental education is going to be. And I post my daily levels every single day, and I do high time frame breakdowns every single week. So this is how I mark my high time frame levels. This is the set of rules that I follow to do it. You have to follow these rules. Watch this video over and over again. Practice on a lot of different assets. You could go through and practice on a ton of different futures: heating oil, natural gas, lean hogs, corn, copper, gold, Ethereum, crude oil, everything. Practice on everything you possibly can. Make sure that they're futures. Make sure you have B adjust turned on and set turned off. And yeah, this is how I mark high time frame levels. Absolutely critical. The single most important thing in my entire trading. And hopefully you got something out of this. And I'll see you guys in the next video.